thank you for joining us.
Thanks, Matthias, for the intro. You guys are really like one of the earliest bakers. You were back with Pioneers Ventures. You were the first institutional fund who invested.
Yeah, indeed. No, and very great to having had the opportunity. Before we get to it, and I was just setting the stage basically. I want to make sure that people understand what we want to get out of this session. So there's basically two major lessons learned that I would like you, the audience, to take away from the session. So first, I want to allow you to better understand GoStudent's sales-driven growth playbook and how the team found the right model. And then second, I want to give you a glimpse at Felix's outstanding fundraising skills, and obviously hoping that it will serve you well for your own future fundraisings. And you can already sense the energy. So let's dive right into it and start with the first question. Starting as a viral C2C homework chat app, GoStudent has evolved into a one-on-one online tutoring student platform that is paid for by parents. So how and when did you make that switch?
Yeah, that's a really good question. We launched our community service around 6 years ago. That was 2015, 2016. So kids were given a WhatsApp telephone number. They ask questions in this WhatsApp chat, and then we connect them with other teachers who answer these questions. And this concept we scaled in our own mobile app to over 500,000 kids in Germany and Austria using that on a monthly basis. But the big issue we had, and it's also one of the issues actually almost all education companies have globally, the people using the service are not the people who are paying for the service. So as you can imagine, a 13-year-old kid, the last thing that kid wants to spend his pocket money on is an education app.
Yeah.
So what we did then over the course of 3.5 years, and it took us almost 4 years to realize that, we realized in order to make money, first, we need to get to the parents because they are the decision makers. So we need to address them directly. And the second thing is chatting alone is not enough for parents to get convinced. So we had to step up the game, and we actually had to connect kids with teachers in a live virtual one-on-one setting. And realizing that, and it took us quite a lot of time. Then it really took off end of 2018, beginning of 2019.
Mm-hmm. It's interesting because I would like to kind of better understand of how you basically realized, because of course it took you some time, but I wouldn't say that this was time that you spent in vain, because you obviously built this huge audience also of students, right? So you basically already started to build a foundation of today because you got all these students and people using and users using your app that then you can monetize actually and build on top of that. So when did you kind of said, okay, we have to go down the monetization route and find ways to monetize this? And what did you maybe try along the way that also didn't work? Yeah?
So when we scaled our mobile app for this homework chat service, we tried out pay-as-you-go models. So for every question that you ask, you pay a certain amount of money, for example, 50 cents or €1, €2. We tested out different prices, but that didn't work out. We tried out a mobile subscription service. So for €10 per month, you can ask unlimited amount of questions. This is a service that also some other companies tried globally. For example, Snap Ask in Hong Kong. There was also an app in the US called Yup. They tried that, but it also never really took off. We tried models for advertisement. So the kids ask questions for free. We create SEO pages, push them online, drive more traffic on these pages, and generate money with advertisement. This also, it was not really scalable. And then what we realized, we had more and more kids, they were asking some of our teachers for a private session. So they wanted to have kind of a 1-hour session with the person who gave them this answer in the chat room. And that was the moment we realized, okay, for monetization, this fast Q&A chat service is not enough for the kids. We need to really connect them in this proper one-on-one setting. So we introduced this premium feature where the kid can actually ask for an online session with one of the teachers. Still, the problem we had, a lot of the kids texted us, they can't pay for the service, they would love to use it, but the parents don't understand it, etc. So what we then did is we were addressing the parents directly with online advertisements. So we created Facebook ads, we created Google ads, telling the parents directly that we offer one-on-one online tuition with awesome teachers. And the effect was nothing happened. I think we had cost of acquisitions for one paying parent of around €1,000 at that time. So that they buy one session. And then it was kind of a moment of, let's say, a bit also desperation that my co-founder and myself, we were actually taking up our mobile phone and we started to call the parents who signed up, where we spend a lot of money on. And that was the Heureka moment, because when we called them, what happened is the parents told us that they have no clue at all what this online tuition is about. They thought it might be some YouTube video. They thought it might be completely asynchronous. And then when we had them on the phone and we were able to explain them what we offer, and we were also able to better understand what their children need, suddenly almost all parents said, hey, that sounds actually amazing. I want to try it out. And from that moment on, we introduced our internal sales center, where even today, every parent who signs up, they get a phone call and then a consultative sales approach to sell our services.
Yeah, I think that's I think super valuable insight, and also super interesting probably for a lot of the entrepreneurs in the room. I think these kind of pivotal moments, when you have this aha moment and you realize, okay, that's actually the way to go, is when you that can really make the difference for a company. And I think in your case, you were so to say smart enough to pick up the phone yourself and call the parents and learn that. There's probably also many people that maybe never get to that point or don't have this opportunity. So I think that was great, and probably then allowed you to do that. But it's also quite interesting, because coming from a C2C app and then actually going more almost like a B2B sales approach, telesales, where you call up parents and to actually create trust, right? Is quite interesting. And of course, you need to have the, unit economics and the retention basically to make that work also, right?
Yes.
I mean, not everyone can afford to have an inside sales team doing outbound calls to parents, basically.
By the way, this was also when we started with that model. We were selling single sessions to parents. So let's say a single tutoring session to the parent. And of course, as you say, the unit economics for that didn't work out. So what we then did is we sold not bundles, but we sold yearly memberships. That's also today one of our most sold products, is a yearly membership, or even a 2-year membership. And the parents commit on a 1-year membership with a certain amount of sessions per month. And because they do this commitment, the unit economics also work out, and you can afford a sales team. Maybe one small anecdote to add there. Please. I think if I would found a company again, I mean, I would start much earlier, really understanding the target group. Taking up the phone and talking to them is really, it sounds so obvious. But I still think that a lot of people actually don't do that. And the second thing is, the biggest education company in the world today is a company called Byju's from India. They also operate primarily in India. And they started with a mobile app subscription for content, a bit like Sofa Tutor, for example, in Germany. But what they did is they had an army of door-to-door salespeople. So they were actually sending sales managers door-to-door to the family, selling a mobile app subscription.
Crazy. Yeah, that probably wouldn't work in the Western world in terms of unit economics, but maybe it does in India, which is also crazy, right?
Yeah, what they did in order to make it work out, they were not only selling the mobile app subscription, but on top of that, they were selling a tablet. And with the tablet, they were selling...
So you actually enable it, of course, right?
Yes.
Because people wouldn't be able to take remote tutoring, I guess, without the infrastructure, right? So,
exactly. It was kind of a good selling argument also to the kids, telling them, look, I also sell you kind of this tablet for like a good price combined with the mobile app subscription. So super smart.
Is there any equivalent of this for you, so to say, just speaking about it and thinking about it? Or any kind of upsell opportunities that you see in that regard?
100%. I think something like tablets for kids is something that is kind of an obvious upsell, and it's also something we actually will introduce very soon. That for every new customer, we will send them also like a tablet first for free, where they can test it out, and then if they don't want to keep it, they can send it back to us. So this is something we currently explore that is very interesting. Because it also gives you higher revenues, right? Because when you have then the tablet that you sell maybe for 100, 200, 300 euros, let's say, you can also increase your top line growth and make yourself more attractive than for follow-up rounds.
That makes a lot of sense. And maybe since we already speak about expansion, maybe that's a good topic to tap into next in that sense, because you are obviously originally from Austria, from Vienna, and which is a comparatively small market, at least in the broader scheme of things. So how did you kind of build your, let's say, expansion playbook from Austria, and then also expanding into all these markets that you are already present in today? I think I mentioned it in the beginning, also about 15 different markets, and you're probably also planning to expand into more right now. Is this like a general playbook that you have that applies to all the markets in more or less the same way, or did you develop like dedicated playbooks for specific markets?
So first and foremost, I think one of the advantages of founding a company in Austria is you need to think globally from day one, because as you mentioned, I mean, the market is in itself just too small for a digital education company like us. Yes. So I remember still very well, like 4 years ago when we did the fundraising, a lot of investors, they were also telling us that overall the market is not big enough, and we kind of need to stay in Germany. But what we also realized, by expanding quickly to other countries, you increase your addressable market. And by increasing your addressable market, and you know it from the investor's perspective, you can drive up valuation, because your potential market is just bigger. And this is what we actually did then in early 2020. We started with France as the first non-German speaking market in which we expanded. And as mentioned before, we rely on a sales team that is calling the parents. So what we did is we set up local operations in France. We actually picked Lyon as our city to set up the operation. So we hired local salespeople, a country manager. We hired a country manager from EF, the language travel company, because they had also like a very like sales heavy approach. So we hired a country manager from them. Then we had a customer service team that we also hire locally, and a tutor operations team that hire the teachers and maintain the community.
Because you need to build liquidity locally in every market, basically, right? Because you need the tutors that speak the language, that understand the local education system and the local curriculum and all these things, right? So that's why I was also wondering, it's a specific challenge in your case that you actually need to go country by country, especially in a market or region like Europe, where it is very localized. Sometimes even within the countries, you have different education systems inside Germany, right? Depending on where you are. So I think that's a really, how to say, a hard nut to crack. But it's actually, if you manage to, I think it can be really, really valuable, right? So,
and I mean, it's still like, when we start in a market, we only need 4 or 5 people. We hire these like first sales managers, customer service people, and tutor people, and the rest is centralized. I mean, the marketing campaigns nowadays, I mean, you know, you go on Facebook, you can duplicate, you translate your ads, and you can instantly play it out in a different country. So this helped us a lot. And this is also one of the reasons we were able to raise really big rounds then, because the investors saw we can scale quickly in another country and have a bigger addressable market in front of us.
Interesting. So basically keep everything that you can centralize and do from, let's say, Austria or Vienna, keep that centralized, and then everything that needs kind of local attention you have basically locally in those markets. But it also means you will have quite a big geographic footprint in terms of looking at your team the more you expand, basically.
100%. And also this is something, and maybe for some of the founders that are listening that could be of relevance, is we actually had a huge discussion when we hired our first country manager, whether you give your country manager P&L responsibility or not.
Yes,
exactly. It's a question every company I think has to ask when you
metrics organization. How do you do it? I know this myself.
Exactly. It's complicated. So the way we solved it for us is the country manager in our case has the responsibility over the sales team, and the country manager basically reports to our VP of sales that is centralized. So our country manager doesn't have overall P&L responsibility. We tell them kind of the budget and the plans, and then they need to hit.
And within that, they can work. Yeah, I think it makes sense. Like the moment you have like cross responsibilities, that usually doesn't work, at least in my experience.
Yes, it's complicated. It's very complicated.
Maybe speaking about this scaling now and this expansion, so how did you get to the different levels of paying customers? So I don't know what were really the milestones for you, if it was like I don't know, the first 1,000 and then I don't know, 5,000 and so on, or how did you kind of put the milestones for yourselves, and how do you look at that in general also going forward?
I mean, we actually joked about that the other day while we were preparing our budget for the next year, because now it's actually a complicated process. You need to align with all the teams. You need to make like a really structured calculation around that. 2 years ago, we actually said, okay, we want to grow like 700%. And based on that, we kind of defined our targets. And it was really like that, and that we were just trying to hit that. So we always set like very ambitious goals. And then but
you hit those basically also, right? You made it basically. That's the point also. I mean, it is ambitious, but it also has to be achievable in a way.
Yes, no, 100%. I mean, we really worked our ass off, and we were giving everything we can. But I think it's important. You need to set yourself like high ambitions, and then execute and get it done.
Yeah, let's maybe switch to the second topic that I wanted to talk about, which is more on the fundraising side of things, because I think you have seen an outstanding fundraising success also in a very short amount of time, and raising from very high profile investors several rounds, even within less than a year, and basically becoming Europe's first edtech unicorn and reaching a valuation of above $1.7 billion. So what is your secret sauce when it comes to fundraising, and how did you manage to get all this interest in such a short amount of time?
I mean, I would say there are three key things. First, you need to have the metrics. So with metrics, I mean primarily growth. Right, the growth rates is getting one of the most important KPIs.
But growth on revenue in your particular case,
yes.
In your case, it's even in a way bookings and MRR actually, right?
Yes,
in that sense.
Exactly. Like really year on year, strong growth on your top line KPIs, whatever it is in your particular company.
Yeah.
Also, you need to show some sort of efficiency in your core markets. With efficiency, I mean primarily a good LTV to CAC ratio. Right, it basically comes down to that.
So for you, it's then showing that it works in basically in Austria, or Germany, etc.
Yes, that you can actually, if you would decrease your marketing spendings, that you can have a profitable business in your first main markets. And that you have like healthy economics, or if you're like a SaaS business, for example, that you have a good net revenue retention. So strong metrics. That's, I would say, if you don't have good metrics, then it's going to be very difficult to raise. Because
the fundamentals need to be there, so to say. Yes. That's important.
Yes, fundamentals need to be there, and also like nowadays the big investors, I mean, they have their own screening software, so they check I don't know, your LinkedIn employee growth and all these things to make the alarm. Second, you need to have a good team. right? So when you meet the people, they need to believe in you as a management team, in you as a founder team. So that's the second thing that has to fit, and it has to fit on both sides. So also when you get in investors, you, from a personality perspective, need to like them. And then the third thing is, and this is maybe I would say the also a bit trickiest part, you need to create FOMO.
Yeah.
And I know it sounds, I also, when I heard that for the first time, I think 3 years ago, I was like, yeah, but for the fuck, how does this work?
Yeah.
I give you a very concrete example how I did it. For example, in the Series B round that we raised with Koto beginning of 2021, we were just saying like, look, guys, we have a lot of inbound interest, and it looks that one fund is going to preempt our round. And we will get this done now in the next 2 weeks. And you have basically 1 week to do your due diligence and then come back to us with an offer or no offer. So really like create scarcity in time, tell them clearly you are going to raise this round with or without you. So, and give them a clear time window. If you tell them, yeah, maybe we want to raise in 2 months, in 3 months. Yeah. Also the investors, they will also take time. But when they see, okay, it's going
there is urgency. Create urgency.
Create urgency. Super important.
But it obviously needs to be credible, right? And it needs to be real, as in there needs to be a real threat that someone else does it, right? So I think you can obviously, to a certain degree, maybe oversell or tell your own story around that, but at the same time, it's much more credible. And if this is an actual real threat, which maybe nowadays it actually is, considering the crazy environment that we are in, but also back then, or even in your previous round, maybe was not the case at that time, or not as much.
Definitely it was. It is definitely a fine line. For us, I mean, raising our Series A round, that was early 2020. It took us half a year, and we were talking to so many funds, and we got so many rejections, and everybody told us, education, what the fuck, this is no market, and so on and so forth. So yes,
So from that point of view, you obviously also benefited probably a little bit from the kind of COVID tailwinds, I would say, as in digitizing education, of course, right? And I think then it was a no-brainer probably for a lot of investors, seeing that, this is happening, this is the case, right? And then, of course, this was underpinned by super strong performance and the KPIs on your side. Execution, of course, related to that, because that's what it comes down to then when you look at the numbers, is obviously your execution of doing that. And eventually create some sort of scarcity in terms of both time, so urgency, but also I guess in investors, right? So you need to create a bit of a competitive situation. And I think, if I remember correctly, but correct me if I'm wrong here, after your previous round, so not the last one but the one before, you I remember the story that basically you immediately after the round that you had done before, you basically raised it with the same deck, and on the same basically started raising it on the day that you closed the other round, right? So I don't know to which extent that also plays a role, but I mean, you also have to have the guts to do that, right? You basically just got the money on your bank account from the previous round, and then you already start picking up the phone and say, hey, we are doing this now.
Yes, and I mean, look, if you find that your business can take more money and that you can actually also do something with more cash on the balance sheet, then let's do it. And also right now, I mean, you mentioned it, the market environment is crazy. I mean, raise as much cash as possible right now, because nobody knows what is happening in 1 year from now. So let's do it and don't waste time.
That's a fair point, but I think you also have a model, as you said. If you can show the efficiency, you can show that it works in specific markets, and it's about then rolling it out and expanding. There's obviously a big advantage that you have in your particular case. So you can then also consume, in that sense, a lot of cash, maybe compared to many other players. And then thinking about marketplace dynamics, that obviously allows you to grab market share, build up liquidity faster, and basically close up those markets for you. And also in that sense have unique supply, right? That's maybe an interesting topic to touch upon. I would assume that most of the tutors that you work with in a way work maybe not exclusively, but most of the time with you.
Yes.
So it's also then harder for someone else to break into these markets without having that supply.
Exactly. No, 100%. The more you control the supply side, the more you make it difficult for any other future competitor to get into the market, because for them, it's going to be super, super expensive, fill up the supply side and scale it up.
Yeah, exactly. Great. What do you, maybe lastly to wrap it up, what do you think about the kind of current environment, especially with regards to online tutoring? So maybe less about the financing or fundraising side of things, but especially thinking about the crackdown in China, because I'm sure most of the people today have heard that obviously China forbid basically online tutoring, right? And it was I guess one of the biggest markets globally. So what's your take on that?
I mean, China or the government there, they have their reasons why they did it. But what we see the market from investors is actually the investors are now even more pushy on education companies in the Western world. So for companies like us, that is definitely of advantage. What is maybe not so much of an advantage is, and this also didn't change during Corona, is what is a good scalable monetization model for education businesses. That is still one of the biggest issues a lot of education companies face. And also, if you look at the education companies that went to public in the past months, Udemy, Coursera, Duolingo, I mean, they're performing good, but they're also not exploding. You know, it's not like in the crypto industry. It's not like in the fintech industry. So it's not so exploding. And of course, as an investor, you look what is the market environment, where are the next stars born, and you go after that. So overall, I hope that, I mean, I love education, and we will push as much as possible. I hope that we can also support the ecosystem there, that founders
be
feel
a role
inspired.
model for others. And I think you're right. I think monetization and the way how you monetize in edtech, also partly because of regulation of how the markets are structured, etc., remains tough, right? Depending on which vertical you go after. And I think you were really also in that sense fortunate to be in this market where it's also out of pocket spending, and obviously parents want their children to succeed, and there's a very high willingness to pay if you manage to build that trust and deliver this kind of service and deliver this kind of quality, right? Which I think is also important to mention. If you think about that, you are selling 1-2 year contracts, that takes also a big leap of faith from parents to do that. So that would not be possible unless you would be delivering a quality service.
Yes, no, definitely, 100%. So I think, and also again, with companies like Byju's, I think they're really good for the ecosystem. They show that it is possible to I mean, they raised that on a 20 billion valuation on the last round. So it's possible to build large scale businesses there. And that's
your ambition level, I guess, right? So
even higher. Now they are still in the pole position, but we are coming after them.
Great. So I think, we are unfortunately getting to the end, but it was great chatting with you. Thanks for taking the time and being here with us today and sharing a little bit of your journey and how you got to where you are today, which is super impressive. So thanks a lot, Felix, for joining us, and all the best going forward.